Hi there, it's Malcolm and welcome to our latest market update. Well, the favourite subject is normally property values. So if you remember, cast your mind back to the end of 2022 when we had the predictions and forecasts for what was going to happen to property values in 2023. Some real fear going out there in terms of a potential property price crash. Well, it hasn't materialised. Of course, we saw this enormous spike in property prices post-COVID, and that has come to its end, and property values are plateauing, if not reducing slightly, but nowhere near a 30% crash like you might have read about on the BBC website and Mail Online in November, December 2022. So once again, the market proving its resilience. Inflation remains a nasty problem for us all, so your weekly shop will be getting progressively more expensive, sadly, and inflation has started to come down, which is good news, but nowhere near as quickly as anyone would like, and again, not as quickly as the government had and the Bank of England had hoped. So this uncertainty, this continued uncertainty, sadly, is having an adverse effect on mortgage rates. So not as bad as we were in November last year off the back of that mini budget where we saw mortgage rates spike up to above 6%. Early part of 2023, we saw fixed rate mortgages come down closer to 4%, and we're back up, unfortunately, a percent from them. So the mortgages are more expensive now. We have seen some incredible market volatility in the past fortnight, unfortunately. This has reared its head again, something we've not seen since the back end of last year, with lenders pulling products, and this is because they're finding it difficult to price their products, leaving other lenders exposed at the top of the mortgage sourcing tables, and it's causing a domino effect with deals being pulled at short notice or no notice sometimes, so it's incredibly stressful. And what we're actually finding is we're quoting rates to customers, but by the time they've sent the documents in, and those rates have been removed, causing some disappointment again amongst some borrowers. So what we're encouraging people to do if they are taking out a mortgage is to be what we call mortgage ready. So that's create a folder on your computer with your ID, your pay slips or proof of income, bank statements, getting it all ready so that when you're ready to apply for this mortgage, you can get your documents into us so we can quickly check them and lock down that rate, secure that rate for you. In terms of remortgaging, people whose deals are coming to an end, really important that you get locked into that new deal as quickly as possible. Most lenders will let you switch rates prior to completion anyway, but if you're concerned and you're anywhere worried that interest rates are going to continue to rise, potentially making your mortgage less affordable, and engaging 6 months before your deal comes to an end is the right thing to be doing.